I think there was an expectation that the pandemic was going to tamp down interest in vehicles, both new and used, and yet the opposite is happening. What do you think is driving it?
Well, I think it's undoubtedly very interesting. I think, when this first hit, there's no doubt there was a huge hit to demand. We saw car sales drop 30, 40, 50, even 60% very early on. But they started to recover very quickly in late April, and they've continued recovering. Many retailers, including ourselves, are actually now up year over year, significantly in our case. And so it's definitely recovered very quickly, and I think that was probably not the baseline expectation heading in.
In terms of the customer that's coming in, are we talking luxury? Are we talking mid? Are we talking low? What are we looking at here?
I think across the board, probably the biggest change has just been with the decrease in gas prices. There's a lot of demand for SUVs, a lot of demand for trucks. But there's a lot of demand across the board. There's a lot of demand for off-lease vehicles right now as new production starts to spin back up. There's a lot of demand for older cars. They're a little less expensive. So I think across the board today, we're seeing a lot of demand in all of automotive retail.
How much do you think this is pulling from new car sales right now?
Well, I think to some degree it's pulling from new car sales. I think because used cars are a little less expensive. I think to some degree there's maybe a push away from new car sales because production is slowed down and incentives are being pulled back a little bit as a result. And I think that's probably likely to continue for at least the immediately foreseeable future. So I think there's both a pull toward used and I think there's a push away from new as well.
In terms of profit margin for you guys, you guys have a lot of competition. How do you hold the margin?
Well, so I think automotive retail is a very interesting market. On the used side, there's 40 million transactions per year. On the new side, there's 15 million, give or take, transactions per year. There's about 40,000 dealers out there. So this is always been a market that's been enormously competitive and enormously fragmented. I think dealers have found a way to persevere and to have pretty decent margins over the last 75 years. Now, I think what we represent is a new kind of business model where it's an e-commerce centric model where a customer goes to our website, they can select a car, they can go through the purchase process, we deliver to their door using first party logistics, and then they get a 7-day return policy. That business model has a pretty different cost structure than the traditional automotive retail model. And so I think as a result of that, we have additional opportunity above and beyond most automotive retailers.
Ernest, how are used car prices holding up? And I'm wondering what the impact of the bankruptcy of Hertz could be on used car prices and whether or not Carvana could be a buyer of some of those cars that are eventually liquidated.
Sure. Well, I think used car prices have also been an incredibly interesting and volatile place to watch over the last 3.5 months. So in April, we had the biggest decrease we've ever seen in the Manheim Used Vehicle Index, which is one of the measures of used car prices that's broadly used. In May and June, we saw sequentially probably the biggest increase we've ever seen in used car prices. And they're now at some of the highest prices they've ever been at. I think actually maybe the highest price they've ever been at. So that market has kind of spun around quite a bit, just like the stock market gauges and other gauges of economic activity, which has been very difficult to forecast. And I would not want to forecast where it's going to go from here. I think on the new side, there's likely to be supply shortages. There's a lot of demand today. Trying to figure out exactly what demand is going to look like over the next 6 months with increased unemployment potentially expiring, with less stimulus in the economy is very hard. So I wouldn't want to try to forecast exactly where that's going to go. I think forecasting the immediate future is the best way to be immediately proven wrong, and so I'll stay away from that. But there's undoubtedly a lot of supply out there coming back from, you mentioned Hertz, other rental car companies. There's a lot of off-lease volume, but there's also a lot of demand. And so I think the balance of that will drive prices, and that drove it down and drove it right back up over the last several months.